Welcome back to another episode of Palisade Radio. We're here at the Jekyll Island Conference hosted by Palisade Global. Sitting down with me is our second speaker of the day, Matt Geiger. He's the head of the MJG Capital Fund. Matt, thanks for coming back on the program.
Yeah, thanks for having me, Colin. It's been about 9 months since our last conference here in Belize, and it's always good being with the Palisade guys. Great community here.
Thanks. Yeah, it's been a lot of fun. Your speech actually went right after Eric's. And Eric was speaking about his love for gold and his affinity for the metal, and you titled your speech, Why I Hate Gold, but Still Own Gold Equities. Maybe you could just go over the thesis and the 51% against 15% that you described in your discussion.
Absolutely. Well, I wanted to throw a slight caveat there, drum up a little bit of controversy within the room. But ultimately, relative to other metals, I really am not a big fan of gold for quite a few reasons. The first is just the fact that the main sources of demand are the two most primal and base human emotions, vanity and fear. And that comes from jewelry demand, which is about 50% of overall gold demand, and then investment demand, which is about 40%. Less than 10% of gold actually goes into industrial applications, which is what gets me excited as an investor. We like putting money into the metals that we see driving our 21st century globalized high-tech lifestyle. And gold, just due to the price, doesn't really fit into that category, along with other names like silver, copper, uranium, etc. Additionally, I was doing some research here, and it's really pretty fascinating. In 2017, if you look at all exploration expenditures globally for non-ferrous metals, gold actually, 51% of money being put in the ground globally is searching for gold. And that's a pretty massive number. When you think about it. That means all other metals combined see less attention, less geological brain power, less money focused upon it. And to me, that seems to be a pretty massive mismatch. First, from a societal perspective, gold doesn't provide a lot of value to the way we live. And secondly, if you look at the actual value of the gold market relative to the entire metals complex, it only comprises about 15% of the value. Now, it is the second biggest metal following iron ore, but by the same token, it does seem strange to me that we have 51% of exploration expenditures chasing about 15% of the value here, and something seems off from that perspective.
The caveat to that entire thesis that you pointed out is that you do see value in the gold equities that you can't find in the equities of other metals, and that's peculiar. I guess you said part of that is because the space is so big.
Yep. Well, I'm very selective as an investor and a big believer in Pareto's law, where you should never go buy a basket of anything. You should always be looking at 20 opportunities for every one that you select. And if you look at some of these other metals that we like, for uranium, for instance, it's hard-pressed to even name off 20 uranium companies globally. It's maybe just slightly more than that. With gold, you have a universe of 1,000 companies searching for gold as their target metal, and then some more companies that have gold as one of their target metals. And so while I don't necessarily love the metal that they're chasing, from a bottom-up security analysis perspective, there are some pretty astounding bargains out there in the gold space that would make Ben Graham proud. So some examples I threw out during the presentation, Golden Valley Mines, DGR Global, Chalice Gold, Batero Gold, Sullivan Mining Capital. I can't name a single silver, uranium, or nickel play trading at or below the value of its net working capital. And gold, those can be found. So, if you're willing to sift through the universe, I think there are diamonds in the rough, 20, 30, 40 different plays that you could actually build a portfolio around if you so inclined.
And you actually made a wager to the audience, an offer, if you will, that you would give $100 to anybody who could find a company outside of the gold space that was trading under the value.
Yeah. I maybe should have offered more. I'd love to find some of these other metals that I mentioned, these opportunities. I mean, anytime you can take a risk-free reward and have those kind of opportunities, you can make a lot of money. And so, unfortunately, in the uranium, silver, copper space, et cetera, those are hard pressed to find. And so you do have to be a little bit more speculative if you want to get exposure to those juniors.
After you talked about the gold equities, Matt, you went into a diagram showing your 4 areas of interest in the mining space right now. I'll go through them really quickly. The first one was power generation without CO2 emissions. The second one was higher value diets worldwide. And then the EV revolution, which is being led by the likes of Elon Musk with electric cars, and finally the Internet of Things. Can you talk to those points?
Sure. So, one thesis that you saw missing there is the debasement of currencies globally. I know a lot of the people in the audience here, that's a theme that they're very excited about. But for me, that doesn't get me going as an investor. I don't have conviction in that theme. These are the four themes that I see basically continuing throughout the rest of our lifetimes. And as the world becomes more free, as the world becomes richer, rising middle classes from these emerging economies, these are the themes that are really going to benefit across the board. And there are certain metals that you can play that touch on a lot of these themes that get me excited. Silver is an obvious one, used for photovoltaic solar panels, also for water purification, so that fits into the clean or the food thesis there. Additionally, there's 10x more silver used in these EV cars compared to internal combustion engines, which is something that many people aren't talking about at least yet. Big believer in uranium. If you're looking at nuclear power, it's really the only form of baseload power that can operate 24/7 without any CO2 emissions. Obviously, wind and solar power is exciting, but the wind doesn't blow 24/7 and the sun doesn't shine 24/7. Battery technologies are still improving, and so you still do need these baseload power opportunities. Of course, the uranium industry has been absolutely decimated since Fukushima in February 2011. It's been about a 7-year slog, but I do see a lot of opportunity there. Copper also fits into a lot of these theses, both with the electrification, EVs, fits into the Internet of Things in terms of wiring, even rare earths, which is a space that's been hated ever since the rare earth bubble of 2011. But there's opportunities there, and for multiple of these theses. The first one being power generation without CO2. Rare earth metals are an integral part of wind energy. You also have the EV aspect of things, where depending on certain adoption rates, projections are that besides lithium and cobalt, there'll be no bigger beneficiary of the EV revolution than rare earths. And then additionally, in terms of the Internet and Things, basically household items, things that have always been low tech now have a mini computer in it. You need a display for that, you need transmitters, you need circuit boards, and rare earths are really a key part of all those components.
Well, Matt, I appreciate you coming down. In fact, before I end the interview, I wanted to ask one more question that you didn't touch on in your discussion today. You run a tech company that's based in California, and you also run your investment fund in the resource space. There's been a lot of speculative money flowing into the cryptocurrencies. What's your opinion on that as opposed to real money backed by something like gold or silver?
Well, I'm certainly not a believer in the cryptocurrency phase. I do see some value with blockchain technology, and I think that will be around for decades to come. I also can see why there is Bitcoin demand. It's basically, I heard a banker recently call it a money laundering index, and I do think there's something there. Similar to gold, this is a way to exchange value without governments being able to see. However, right now it's turned into completely a speculative mania. Bitcoin could be worth $200 and still be used as money laundering. So right now I think unless you're an astute speculator with a clear stop loss, I would steer completely clear of the crypto space. Look more towards the metals that, again, are more contrarian right now, but help us actually live. I mean, you can use your cryptocurrencies to buy things, but ultimately you need things, and cryptocurrencies can't make up the cars we drive or the food we eat or the things we wear or the appliances we buy for our house. So I'm much more interested in buying tangible assets that can be employed in our 21st century lifestyle.
Well, Matt, thank you so much for coming down to the conference, joining us, and doing this interview together. Look forward to having you back at our next conference. We'll definitely do one next year here at Jekyll, and maybe one before that. So. Thanks,
Colin. Always a pleasure. Appreciate it.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?